Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. And I'm Arjun Patsarthi. And in today's market highlights, the India's current account deficit for the year 21-22 was at a 3-year high. And this current account deficit is not a good sign for the economy and for government bond yields, given that the yields are at uh, close to 2-year high levels. And the 10-year yield today was slightly up by 2 basis points, while the equity markets were higher and the rupee flat, and US Treasury yields down. But before coming back to current account deficit, download our app, Quick Invest Buy our bonds to invest in the best bonds in a time when current account deficit is high, inflation is high, and the rupee is falling. The bonds will can protect your portfolio as well as give you returns beating inflation and certainty of returns.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Coming back to current account deficit, the current account deficit is the difference between whatever India receives in the current account and also whatever India pays in the current account. So this includes goods and trade goods and services. And India's current account deficit was negative. That is, they import more than they export, and this was at a 3-year high. And how does this affect inflation? Clearly, when there is a huge amount of the trade deficit, there is a pressure on the FX, the rupee, because the, the, there is more outflow of dollars than inflow of dollars. We'll come back to it. The capital account, what happens in that through portfolio flows is a separate thing. But having said that, there is a pressure, and unless this is funded by capital flows, then the rupee is in big danger. So the Indian rupee is trading at record lows, and when the rupee is falling, then the cost of imports rise, and when the cost of imports rise, inflation also rises. And India is seeing high inflation as well as the world is seeing inflation. Interest rates are going up. There is a lot of panic. Sensex and Nifty have given negative returns. The rupee is falling to record lows, like I mentioned. Global bond yields are at record many years, multi-year highs. So there's a lot of uncertainty, and current account deficit in India adds to the uncertainty. Thank you for listening in. Do not forget to subscribe to our YouTube channel if you've not done so already.